In a world of financial noise, let's find the signal. Welcome to Smart Money Sense. Yesterday, a single company sent a shockwave through Wall Street. You might have seen the headlines, you might have seen the news. Snowstock. That company is Snowflake, and its stock price just rocketed up by as much as 20% in a single day. Now, it's easy to see a number like that and just move on. But if you do, you'll miss the real story. This isn't just about one good quarter. This is a story about a fundamental shift in our economy. It's about the moment artificial intelligence stopped being a buzzword and started showing up as cold, hard cash on a balance sheet. And if you stick with me through this entire video, I promise you'll understand not just what happened with the Snowflake stock, but why it happened, and what it signals for the future of technology, your investments, and even your career. This is a story you need to understand. Let's get into it. All right, let's start with the facts. On August 27th, Snowflake released its second quarter earnings report. And to put it mildly, they crushed it. Wall Street analysts, the people paid to predict these things, expected Snowflake to bring in about $1.09 billion in revenue. Instead, Snowflake reported nearly $1.15 billion. That's a huge beat. But the real shocker was on the bottom line. Profit. They were expected to earn about 27 cents per share. They delivered 35 cents per share, almost double what they earned a year ago. Now, why does this matter so much? Because when a company beats expectations by this much, it means the experts fundamentally misunderstood how fast the business is growing. It tells us that something big is happening under the surface, something that their models didn't capture. And that something is AI. But before we get to the AI explosion, we need to look at the engine room of Snowflake's business. Their core business is product revenue. Think of it like a utility bill for data. The more data a company uses, stores, and analyzes on Snowflake's platform, the more they pay. That number grew by over 31%. Even more impressive is a metric called the net revenue retention rate. It sounds complicated, but it's simple. It measures how much more existing customers are spending compared to last year. Snowflake's rate was 125%. Let that sink in. Even if Snowflake didn't sign up a single new customer, its revenue would have still grown by 25% just from its current clients using the platform more. This shows their product is incredibly sticky. Once a company builds its data operations on Snowflake, it's very difficult to leave. And they are landing the big fish. The number of customers paying them over $1 million a year grew by 27% to 654. These aren't startups. These are global enterprises betting their future on this platform. If you're finding this breakdown of the numbers useful, do me a quick favor and hit that like button. It tells the YouTube algorithm that this is valuable information, which helps us bring this kind of deep dive analysis to more people. It takes 2 seconds, but it makes a huge difference for the channel. Okay, so we've established the what. Now for the billion-dollar question. Why is this happening now? The answer is a massive shift in corporate spending. For the last few years, AI has been an experiment. Companies had small teams playing with new models. Now it's becoming a core part of business strategy. It's moving from the research budget to the main technology budget. Think about it. To power any AI, from ChatGPT to a recommendation engine on a shopping website, you need one thing: massive amounts of clean, organized data. AI is a hungry beast, and its food is data. If a company's data is messy, siloed in different departments, or stuck on old servers, their AI ambitions are dead on arrival. This is where Snowflake comes in. They provide what they call the AI Data Cloud. It's a platform that lets a company pull all of its data together in one place, no matter where it's stored. Amazon's cloud, Google's cloud, Microsoft's cloud, it doesn't matter. Snowflake creates a single unified layer on top of it all. They're not just selling the picks and shovels in the AI gold rush. They're building the entire operating system for the mine. They're becoming the essential foundation upon which companies build their AI strategies. And for the first time, Snowflake put hard numbers on this. Management said that AI was an influencing factor in nearly half of all their new customer deals this quarter. They also revealed that over 6,100 companies are using their specific AI tools every single week. This isn't hype anymore. This is a direct line from the AI trend you read about in the news to the revenue flowing into Snowflake's bank account. It's the proof Wall Street was waiting for. So, how did the market react to this proof? With an absolute explosion in the Snowflake stock price. We saw a surge of up to 20%, hitting a new 52-week high. Immediately after, the big Wall Street firms, Piper Sandler, TD Cowen, Evercore, all rushed to upgrade their price targets, with some now projecting the stock could go as high as $285. This is the market rapidly repricing the company for a new reality, a future where its growth is even faster than previously imagined. But this brings us to a critical point: valuation. Even after this jump, Snowflake is an expensive stock by traditional measures. It trades at a very high multiple of its sales and earnings. So, what's going on? Investors are looking at Snowflake not for what it is today, but for what it could become. They are betting that the market for AI and data infrastructure will be so colossally massive, trillions of dollars, that owning a dominant player in that market, even at a high price today, will pay off handsomely in the future. It's a bet on the size of the prize. This isn't just about Snowflake either. This news sent positive ripples across the entire tech sector. It signals that companies are spending, and spending big, on technology. That's good news for hardware makers, other software companies, and anyone invested in tech-focused ETFs. A rising tide fueled by AI spending lifts all boats. Now, I'm curious what you think about this. Is this valuation justified by the AI growth story? Or is the market getting ahead of itself? Drop your thoughts in the comments below. I read every single one, and your perspective is a huge part of this conversation. It helps everyone in the Smart Money Sense community get a more complete picture. So let's zoom out. What does the success of a company like Snowflake mean for the rest of us? For other companies, it's a wake-up call. There is now an arms race for data supremacy. If you're a business that isn't investing in a modern data and AI strategy, you are falling behind. Fast. We're going to see a data divide open up between the companies that can harness their data and those that can't. For us as consumers, it means the products and services we use every day are about to get a lot smarter. Better recommendations, more personalized experiences, more efficient customer service. The AI being built on platforms like Snowflake will power the next generation of digital life. And finally, for us as individuals, as investors, and as workers. This whole event is a masterclass in understanding how technology trends drive the market. But more importantly, it's a signal about the future of work. The demand for people who can work with data, who have data literacy, is exploding. It's no longer a niche skill for techies. It's becoming a fundamental requirement for jobs in marketing, finance, logistics, you name it. The success of a company like Snowflake is a direct indicator of the skills that will be most valuable in the economy of tomorrow. So, the Snowstock trend wasn't just a random blip, it was a signal. A signal that the AI revolution has moved from theory to reality. Snowflake's incredible earnings report was the evidence. It showed a company perfectly positioned to capture a massive wave of corporate spending, driven by the single biggest technological shift of our generation. We've covered the numbers, we've analyzed the AI drivers, we've looked at the market reaction, and we've explored the consequences. You now have a 360-degree view of the story behind the Snowflake stock surge. You've cut through the noise and found the signal. Now you have a clearer picture of the Snowflake stock phenomenon. But the learning doesn't stop here. The world of finance is always moving, and staying ahead means staying curious. If you believe in making finance make sense, join our community by subscribing. We post deep dives like this every week, so you'll never miss a critical market insight. And for more clear analysis on the biggest trends in tech and AI, check out our playlists. Keep building your sense.